morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, what I'd like to do is talk about the equity markets. The equity markets are in confirmed uptrend and continue to plow higher. Now, let's take a look at the weight of the evidence and what's going on. What I'm referring to is markets continue to climb. There's this constant wall of worry. Everyone has an opinion. We've come too far too fast, etc., or this is unsustainable, the market's overvalued, etc., blah, blah, blah. However, so what I refer to, let's take a look at the weight of the evidence. Let's take a look globally around the world, what's going on. And what I mean by that is we look at the Dow Jones Global Index, it's hitting new highs. And that's an index that's comprised of many, many countries, basically from Austria to Hungary, China, Mexico, Brazil. And that index is hitting an all-time high. And similarly, it's not being masked, meaning if we look at each individual country, whether it be the Brazilian exchange, that's hitting new highs. The Mexican exchange is hitting new highs. We see that the FTSE 100, the London exchange hitting new highs. Whether it be the DAX, it's also hitting new highs, breaking out. So we see this global phenomenon going on. Even the Nike is breaking out. It's not hitting new all-time highs, but it is breaking out. So basically, that tells us that this is a real rally going on. And this is not an opinion. This is the way we look at the global charts, and it's showing us markets breaking out into high. Similarly, if we look at the U.S. indexes, the major indexes, we saw the Dow Jones hitting new highs, the S&P 500, the NASDAQ, the Wilshire 5000, which is probably the most broad-based index to look at in the U.S., hitting new highs. Okay, we did get last few days, the small caps. The small caps couldn't hit a new high. They've been basically consolidating, moving sideways, and at the end of last week, trickled off a little bit. We can also look at the sectors, the major S&P sectors. So we have technology sectors hitting new highs. That's the XLK. We have the XLY, the discretionary sector, hitting new highs. The industrials, the XLI. We can look at the material sector, XLB, right near there. And then, and financials, of course, the XLF doing very well as well. Now, also, sectors that were lagging, specifically healthcare sectors, XLV, the utilities, XLU, and XLP, the staples, those are actually moving off the bottoms, also participating in this rally. Now, one thing I would look for is if those defensive sectors, basically utilities and staples, if they were to overtake the other sectors, then maybe something's changing. Now, we do have one little slight divergence, that's in the transportation sector. It's been doing very well, but hasn't been able to hit those new highs over the last week and trickled off a little bit. So I'd be looking at those for the clues as to what may be going on. So now the question is, well, how could this be going on? What's driving this? Well, you never really know what's driving this. There are alibis. So we can provide you with some alibis. For instance, fourth quarter of 2016 earnings looks like they're going to come in at about 4.9%. In December, as of December 31st, estimates were only for that earnings to increase only about 3.1%. So it looks like we're coming in much higher, 4.9%. That's going to be the second quarter of a consecutive growth. Also, we're looking at quarter one of 2017 growth, earnings growth coming up to 9.6%, and for the full year of 2017, estimates are for 10.2% growth. So that's very solid. Okay, so you might ask, what's going on in the rest of the world? Well, just look at the GDP growth around the world. The Eurozone's growing about 0.4%. That's a little bit more over 1% year over year. And same, so you can look at separate countries like Germany growing 0.4%, Norway's at about 1%. Eastern Europe, you have Poland growing about 4.7% last quarter. And then we look at Malaysia, they're growing over 4%. Taiwan's probably over 2%. So you see this phenomenon going on even all around the world. Even Greece had a negative quarter growth, but it was actually positive year over year. So again, here's an alibi that may be telling you why the markets are moving higher. That is backward-looking data, but again, it is still good data. And similar in the U.S., we have economic data that's doing really well. Retail sales in January came in at 0.4%. Mining output grew about 2.8%. That was mostly due to fracking. Purchasing managers indexes, whether it be manufacturing, non-manufacturing, continue to be very positive. So that again could be providing the fuel why the market's moving higher. So now as the market moves higher, no doubt there'll be no shortage of opinions, but the thing to keep in mind, if you have all indexes around the world and the U.S. and all sectors hitting new high, that is not a bearish thing. Yes, in the future it could change, but at this moment it's not changing. So the weight of the evidence suggests that these markets probably have a little bit more room to go. They probably haven't fallen, they probably have not turned down because the sky hasn't fallen. We're constantly reminded by the media, especially financial media, how terrible things are, etc., or how this and that can happen. I say, look at the charts, look at the weight of the evidence. That will point you which way the market's going to be going. So as I say, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Hope you have a great trading week.